Hi, my name is Chris Condon. I'm a real estate broker with John Green Commercial, specializing in industrial properties down here in Will County. Had an opportunity here over the last couple of weeks to ask a handful of bankers that I do business with on a regular basis, kind of what's their tips and or suggestions on what's kind of the easiest way or the best way to go about financing purchase of an industrial property. So came up with kind of five top ideas or top concepts, ways that I thought would be helpful for you if you're considering a purchase here. Number one being line up your financing in advance. Have a conversation probably to begin with your business banker to begin with. If you don't necessarily like the answers or the solutions they provide, happy to introduce you to the handful of bankers that I work with on a regular basis. But really this will allow you to get a better understanding of what exactly you can afford, what exactly is the approval process for each bank, and each bank's going to be different, and then a better understanding of what exactly are they going to require of you for the financing. Critical first step here, helps to start exploring some options here. All banks are going to need to have a better understanding of what exactly your credit history is and or your financial history. So putting together a complete package of all the information that they're going to need is the second critical step. You're going to need personal financial statements. You're going to need your personal and business tax returns from the last 3 years. You're going to need the K-1s from every entity that you're involved with, from investments or business. And then ideally something that a lot of people don't think of, kind of a biography of what's your experience in business and what's your experience in real estate would be very helpful. Most of the complaints that I hear from bankers are around, they'd be able to move faster or do things better, more efficiently if they could just get all the information that they need in one time. So they're all going to require basically the same information. Get that information together early, put you in the best position to be able to get your approvals. Thirdly, each bank has different abilities and different programs. Some banks are going to require somewhere around 15% down. Others are going to require somewhere around 30% down. Some are preferred SBA lenders and have a little bit more pull with them. Others do not. Some have more aggressive type rates. Others do not. Probably makes sense to talk with 2 or 3, sometimes maybe even 4 different bankers on what exactly their programs are, what exactly are their rates, what are their terms, are there prepayment penalties. There's a lot that kind of goes into that, understanding what exactly they have to offer and how does that best suit what you're trying to accomplish. Another thing that they've all recommended or suggested as you're going through this process, do you understand all the potential costs of ownership? Do you have a good idea on what the taxes are going to be, both now and after you purchase? If you purchase for a rate or a price that's significantly above what the current assessed value is, that's going to have an impact on the taxes. You can certainly minimize that or try and minimize that, but it's certainly going to have an impact. What are your insurance costs? What are your maintenance costs? What are your utility costs? All of those things they're going to need to understand to be able to calculate your total cost of ownership and if you're going to be able to afford the building or not. So take the time to kind of figure that out in advance as well, or at least have some estimates so that when you do meet with these bankers, you can paint them the best picture possible of how this is a good idea for you and your business. Lastly, with the way the real estate market is today, with as competitive as it has become, little inventory, a lot of buyers out there looking, somewhat competing over properties, having all your ducks in a row, having all your approvals in place before you start looking, kind of before you make an offer, is a critical step. A lot of times now you can get kind of a full approval from a bank subject to just an appraisal, which is very helpful when you're negotiating. It's probably not quite as good as a cash offer, but it's a close second with that. The other thing is, what are realistic time frames for the approval process or the full approval process with the bank? I've seen banks close some transactions in as quick as 3 weeks. Others it takes 6 to 8 weeks, depending on their internal committee meetings, their appraisals, the reviews, all of those sorts of things. So having a clear understanding of what their process is critical kind of in the negotiation step. So that's 5 kind of quick tips for you. Hopefully you found them helpful. If there's anything I can do for you, if you need any referrals or recommendations for bankers, happy to make some introductions for you. If you have any questions about the market or need anything else, happy to help you however I can. Please give me a call. Best of luck to you, and hopefully I can get a chance to talk to you soon. Take care. Bye.